Livestock Marketing Information Center joined us Tuesday morning to discuss cattle markets. While this event focuses more on cow-calf production than the feedlot sector, we spent time in both during our conversation with Jim. After a rough stretch with drought effects forcing feed prices higher, I asked Jim if he felt cattle producers were through the worst of it and on the way to average or even above average conditions.
Well, it sure feels like it. And Mother Nature's always hard to call here, but from an economic standpoint, we've come through some very high cost environment for both feedlots and cow-calf operations. Certainly the cost of grain as feedstuffs in the next year or so will be lower. The ethanol industry has sort of changed. It's not as quite the force moving prices that it was. And we're looking at more production. So costs of production will be down. But on the feedlot side, that has come simultaneously with the bidding up of feeder cattle prices, which has been good for cow-calf operations, but it's already started to put some pressure on feedlot returns, even though they're in the black right now.
Yeah, go a little deeper here and ask you to contrast what you see in returns for cow-calf producers and for feedlot producers here as we enter 2014.
As we enter 2014, I think cattle feeding is increasingly moves to a break-even proposition. Feeder cattle price has been up, and cow-calf returns should post strong year-to-year gains for two factors. Prices will be higher and cost of production will be down. So for the cow-calf sector, I think 2014 really does set the stage to start growing the cow herd because of increased profitability.
Cow prices on many levels have been extremely high recently. Can that continue and will it continue?
Well, I don't think we'll get as rapid of increases in calf and yearling prices as we've had in the last 6 or 9 weeks. But on a year-to-year basis, we'll have strong increases in calf and yearling prices. If we get a normal corn crop in 2014, we'll see year-to-year increases probably in calf prices fourth quarter of 14 versus the fourth quarter of 2013. So still some strength ahead, given tight feeder cattle supplies and pretty good growth in the U.S. economy and still strong export markets.
I want to ask you about the economy and demand in a second, but first let's touch on corn prices. When we talked in Goodmanson earlier this summer, you had said that corn prices you thought would be in that $4 range, which is where they've stayed. Now that we see a lot of corn on the ground around this area, do you think there's a chance that they dip below $4 at all?
They could. It's certainly in some regional cash markets. We've already seen that in Minneapolis and some of the Midwestern markets on a cash basis. But it looks like we're getting very close to trying to set the floor, at least for the near term in the corn market. But still at levels that are well down below a year ago. We're not going to bounce up prices very quickly. We may get a little bit of seasonal strength in corn prices as we get into early 2014. I think there'll be a lot of corn, though, that comes to market in early 2014 as farmers start to sell at that point in time.
Compared to previous periods, beef demand is pretty good right now. That's what people are willing to pay for beef. Now, if the economy were to recover, would that go with it? Would they be willing to pay even more?
Yeah, certainly the driver of beef demand is the growth rate of the U.S. economy. We have record high beef prices that consumers face at this point in time. And if the U.S. economy continues to grow, even at the rather modest pace that it has been, I think we can continue to push wholesale beef prices higher. It's going to be a slow process. We're competing against a lot of pork and chicken, but the economic growth will be a mainstay here, I think, as we look ahead, and will give us a little bit stronger prices.
Now, does that mean that consumption is not a concern?
Well, consumption is still a concern. Consumption is half of the demand story. There's the price side of the demand relationships and the consumption side. Per capita consumption in the U.S. is going to go down for beef in 2014 and 15 simply because we're going to produce less beef. But that demand profile, including the price and the consumption, both dimensions, potentially can still show some year-to-year strength.
We've learned the USDA has said there will be no mid-year cattle inventory report in 2014. There wasn't one in 2013 either. What's your estimate as to what we'll see here in January?
On January 1, our largest estimate is a slight decline in the U.S. beef cow herd, and the biggest decline would be about 1%. We're looking for about 0.5% year-to-year decline in the U.S. beef cow herd on January 1, 2014. It's probably really already in the cards. We've seen heifer slaughter and cow slaughter that really get us to that point already.
We've had an issue with beta agonists here over the past few months. Do you think this is a large concern as we go into 2014?
Certainly is an issue for the whole beef industry. This is a cow-calf conference, and even at the cow-calf level, we need to really understand what's going on in the feeding sector and in the meat sector. It's going to feed back very quickly. I think time will tell whether the international marketplace still throws up some more barriers. USDA has already announced beta agonist free program that can be certified. I think that's a step in the right direction, at least giving that flexibility. But I think the story's still to unfold.
Is it a bigger concern, and this might be a little early to ask, is it a bigger concern for the export market, or is it a bigger concern here at home?
I think at this point in time, it's a bigger concern in the export market. That can be a shock that can happen and preclude exports rather quickly. I think in long-term sense, it's an issue in both to see how consumers are going to perceive those products. And we know that there's some, we have to look at the quality aspects, what it does to meat quality, and all those dimensions, I think, are still some stories that are still yet to be resolved.
I want to ask you one question about the pork industry. That's the porcine epidemic diarrhea virus. As you're looking at your estimates for the next year, how much are you weighing PEDV?
We think it's become an increasing issue for the industry. We've ratcheted back our pork output estimates over the last 2 or 3 months sequentially as this has become a bigger problem. We think it's a bigger issue than maybe it appears on the surface, and one that is actually holding pork production down and giving us some of the strength in prices that we really didn't anticipate. I think this spills over well into 2014. The USDA quarterly hogs and pigs report, the next one will come out the end of December. Hopefully that'll give us some more insight into the nature of the market hog supply that is being reduced some by this disease situation.